The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour for this Wednesday, January the 30th. And my pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon, right at this time when you're listening. If you're listening right now, this is the time. And in fact, 877-927-6648 is the number to call. There's not all that much that we need to discuss, and I'll explain why. The Dow needs to go. 13,969.99 was the high of the 29th. That was yesterday. Today, the high so far is 13,966.13, 3 and a little bit points away from continuing this leg C. My impression, based on the ChapmanWave methodology, is that there will be a leg D. But when you've spiraled up in this kind of pattern, unless there's an inverted V, or what I call the Eiffel Tower pattern, where it goes straight up, and when it comes down, it doesn't even have bounces of significance. It just comes straight down like a capital A, uppercase A, straight up, straight down, Eiffel Tower. If it doesn't do that, what invariably happens is that you get a kind of a flag pattern at the top. That is a sideways consolidation, which I am anticipating. Even though I am expecting that there's going to be a leg D, the MACD and stochastic are acting in such a way that it tells me that I have an incredible amount of information to be able to watch to see what kind of pattern is going to unfold. Will it be a high-level consolidation and then one quick spiral to the upside, retesting the area of the previous high, 14,198, I think it was, back in 2007, and then we come down? Well, I have a lot of things going on. I've been showing subscribers over and over and over different chart patterns. I gave a full explanation today. This is not even the end of the month, but I couldn't wait. It was impossible to wait. So I showed them this particular chart right here of the S&P. I've shown it many times. For a while I've been showing it with the white background, but the black is so stark. It's so real. Look at it. You've got an incredible chart from S&P from 435 back in 1994 that goes in a beautiful up channel in two buy modes in the ChapmanWave. One goes to an F with a very sharp pullback. It was 1998, one of those turmoil things. I never remember exactly what they are. I'm not even going to try. I just shut them right out. As they happen, that's fine. Then it's history. And then it goes peak ABCD to the top March of 2000 at 1552. And boom, it comes down in a beautiful down channel to a trough F at 768 back in October of 2002. Then what does it do? It goes right up again in two buy modes. A peak E, pulls back, that was 2005, continues all the way to 2007, 1576, and the S&P monthly chart goes to a peak E top, and then what does it do? It reverts back, whoosh, down the channel like a chute, and it goes to a trough F at 666.79. 1576, this is a 52% decline. Ha! Not good enough. It goes all the way back and it forms a wider but still an up channel, a beautiful up channel, which we are in, and I have no choice at this particular time but to say that this is everything about it. Says this leg C to the upside. Doesn't tell you how deep any correction is when you finally get your peak your peak C or D. But what it does say, and now I can go to the white background charts if I can actually find it. Let me get rid of this. You're out of here. So if I go to the white background charts, let me just hunt for it over here. I'm going to show you something really interesting. And that's going to be S&P right there. Click. And here it comes. You see that? I should have checked it out. Let me just go there right now. I don't know if this is going to show up as a pink area, but last time I looked on the white background chart, it didn't show up as pink. It doesn't matter. It is a grayish area. That resistance is going to be dependent on whether or not in February we do not make a new recovery high, whatever the high is in the next 2 days in the S&P. No, today and tomorrow, 1.5 days. And that could make peak C. But if there is an extension of leg C to the upside, it means that leg D will be even higher. It's a forward-looking projection. Doesn't give you price. Other things give you price. That's not the issue. The issue is to get you into the major trend. And I believe that the major trend right now remains up. Now, does that mean that we have 6 long positions in my opening call, all of which are doing very nicely? Actually, even today, not bad. I added a short yesterday, an index short, and I added at least 2 shorts today. But these are shorts of stocks that have had a terrible time lately. And my guess is that they are struggling, and that they will be coming back down very soon. And I've got a pretty tight stop. So that's the way we're looking at it right now. And I've never had this many positions. I don't like having this many positions. It's just very hard for me to keep up because I love to do all the other work as well. But you know, when you see it, you got to do it. And I'm seeing it. I'm still seeing some long positions that I want to get. Fewer and fewer, but there are certain stocks that are absolutely looking really nice. So let's go through the numbers. The Dow is down 6 at 13,948. The S&P is down 2.5 at 1505. The comp index is at 3154. Gold's having a huge move now. I'm still calling it a counter trend move, but I'm impressed. Up 19 at 1680. The silver's up 87 cents at 3206. High grade copper's up 5.70. High grade copper. Is that the high grade copper that we always look at over there? Did it just suddenly perk up? It wasn't this morning. It wasn't doing. Oh, look at that. Excellent move. If high grade copper goes, this is the March high-grade copper. If it goes about 3.7590, and it's at 3.7440 right now, that's going to start leg C in the weekly channel, breaking resistance. That's going to be pretty impressive. And to me, that kind of confirms what I'm looking at in the monthlies. As I say, it doesn't give me upside projections other than to say in the S&P, there's all that resistance between 1550 and 1570s. But it does say that, yes, I'm expecting some kind of a pullback at any point. But, you know, I talk about this ChapmanWave methodology in terms of the different techniques that I have. And the one technique that I've discussed here for at least 7 years, maybe even 8 years, is it's a psychological and a physical chart pattern. The psychological pattern says that every single dip for a long period of time gets bought, that you don't have more than a 1 to 3 day correction. And then when you eventually do have a correction, it turns out to be a sideways correction. And then it goes, that's that oval, the body of the oval pattern. And then it breaks to the neck. And then it creates a very small little head, and then the beak comes down, and that beak comes right back into the body. So it turns out to be bullish shorter term, a little bit bearish, because later on it can come into the body and even break below the body, and then it has a reflex action with a very strong rally. But that rally doesn't tell you how high. It just says it's going to be a rally when you think everything's absolutely broken. As it breaks, if it does break the low, let me go through this in terms of chart patterns. So I'm looking at, that's what I show my subscribers every day. I'm looking at, this is the potential right here for the body. It makes 13,809 to 13,750 as very strong support, and it makes the area of 13,990 to 14,000, I'd say 14,050-ish, right at this particular moment, the upside resistance. And then it hangs around here. It doesn't break down, it doesn't break up, it frustrates everybody, and then out of the blue, it needs a certain period of time. It needs 5 to maybe 7 sessions of chopping around in this yo-yo fashion, forming the body itself, that oval formation. Then it breaks out. It'll fail if out of the blue there's a 300-point decline in the Dow that takes it sharply into the 13,520s and it holds there for 2 days. Then I'm looking at something completely different. But right now, long positions, put on some short positions, and it's all stock, except for one thing, which is an index. It's all stock related, because I think this is a period, most important period, where you've got to think stock choice is absolutely imperative. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good. How you doing? I wanted to look at Berkshire Hathaway as a sort of like a representation.
As a proxy, right? As a proxy for a chunk of things. Isn't that correct?
Correct.
Yeah, that's the way I look at Berkshire Hathaway. Boy, they're in everything. Berkshire Hathaway, BRK.B, that's the way I get it on my system, has made a peak E in the daily. Stochastic is still at 88%, but turning down. On balance volume says be careful. And the MACD is just about across negative, but it is holding the 9-period moving average, which is right at 96.47-ish. And it's at 96.76 right now in the daily. The weekly is still in leg C up, and that is a positive. Yes, I could have an alternate count and call it a right arm extension leg E, but everything about it with a stochastic at 96% and the MACD still expanding says, we should have higher prices. And the monthly has had this is a stock that I've been looking at for a while. I had wanted to put it on as a pick, but I felt that at this particular point, I wanted some, for the long positions, I wanted lower price stocks that showed tremendous resiliency, which would give both a nice percentage gain and a kicker, because they were only just beginning their move up. But I have to tell you that it's at 96.78. The long wick candle of 101.18 high on December of 2007 and low of 87.30 and an open of 94.12, that candle says, be careful. It's like a magnet. It really wants to try for the 101.18 area, between 100 and 100 and I'd say 2.70, 103 maybe. That's the way it looks. So I agree with you. The weekly chart will make a peak C if there's no new high this week, and I suspect that that's going to happen. Wouldn't be surprised if next week it makes leg D in the weekly chart. So I like it. I would not, if you were thinking of this as a short, I would say yes, but not now. And the only time I would consider it as a short, if it bumps up against that resistance, the left side, right side price time match. Let me just see if I can do that right now. Let me grab that. Here we go. Right there. I'm going to go to the right side, pick the most important candle, and that's the candle right there. Okay, I've got it, and I'll give you the layout as soon as we get back. We're on with Mike in Long Island, New York. We're looking at Berkshire Hathaway. Oh, you're looking at I'm looking at the B shares. Those are the tradables. So I'm looking at the B shares, and I'll be right back. The Dow is now down 7, S&P's down 2. Basil Chapman, Tiger Predictions Hour, 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are on right in this moment with Mike in Long Island. But Mike, you're going to have to hold on for 1 second because I have an announcement to make.
Okay.
George of Philadelphia, Pennsylvania, you are the winner of the half-ounce silver bar from Great Panther and TFNN. Congratulations. And if you can call us back at 877-927-6648 today before 6 p.m., we would love to speak to you personally. But in the meantime, I'm here to say congratulations. You are the winner of this hour's I was going to say Pink Panther, but it's the Great Panther giveaway, and that's fantastic. So, Mike,
I feel like it's like Willy Wonka, like the chocolate factory. Look, Basil, my question on Berkshire Hathaway.
Yes.
Let me sum it up. You think we're going to make an E on the monthly in Berkshire Hathaway? I mean, I'm looking at this.
Well, we're in D. We're in D right now. We don't have to do anything. Once you're in D, at that particular point, even though we can go higher, the yellow light is on to say, okay, now I've got to start watching for some kind of a top. And the point that I'm making here is that the C in the weekly says that it should still go to D, but the monthly is saying that the magnet of the long-legged wick of that candle of December of 2007 with a high of 101.18, that would probably be an upside target for Berkshire Hathaway, somewhere between, I'd say, 99 to 102.
Right. But if Berkshire starts turning down, let's say in the next 2 months, is that an indication that the general market will follow?
I think you have a very good point, and I think you have a very good eye, because this is the way I'm looking at it. You know the S&P resistance I just spoke of a moment ago, where if I've got the chart, I'll pull it up. I don't know if I can pull it up. It's the same kind of thing that we're looking at. We're looking at a period and an area of resistance that has historically been a turnaround area. Whether or not it does it again, I don't know. But it also means that just like a 200-period exponential moving average, which you just ignore until you're getting close, or like a gap that you ignore until you're getting close, or like a particular candle you ignore until you're getting close. In this particular instance, it's the previous, I believe that was an previous all-time high in Berkshire Hathaway, one of the great companies in the United States, certainly one of the most magnificent, not stock pickers, but company pickers is Warren Buffett. And this is proved once again as it nears all-time highs. So the stochastics at 88%, the MACD is still good. It doesn't have the same velocity and strength and momentum as it did when it went to the previous high back in December of 2007. But so far, there's a trend line that says a price time match would take it to this coming month, February, as a potential to try to achieve that. And we'll have to analyze it if and when it gets there. But in the meantime, the daily says, be careful on a very short-term basis. This is peak E, probably going to be a pullback, and that would say it might test the 95.80 to the 94.60 area coming up in the next, I would say by Tuesday afternoon, Wednesday morning of this coming week. That's going to be absolutely key right across the board, because I have leg D in the NYA. Is that leg D? NYA.X, the New York Stock Exchange. I don't know why it's not coming up. Dollar NYA.X. There it is. Yeah, this is leg D with a doji candle. Leg E/B in the weekly chart. My suspicion is it's B, and leg C in the monthly. So everything comes together. The S&P SPX daily is in leg C. I'm sorry, on the upside. That's interesting. No. 03. Yes, I knew I missed something. This is leg D. So most of them are in D. It's only the Dow, actually. Even the diamonds are in leg D. The SPY's in leg D. The SPY's in leg C. How about that? Let me just double check. 150.25, 150.33. Yeah. Okay, so we've got the SPY and the Dow in leg C. You've got the diamonds of the S&P in leg D. You've got the New York Stock Exchange in leg D. You've got the IWM in leg D. And so everything else is, we are very close to at least some kind of a pullback. That pullback, I'm just, it's my template right now, says it'll be a choppy up, down move, and then a nominal new high to leg D, and then it'll be a deeper correction. That's just the way I'm looking at it right now.
Right.
Hope that helps you.
Yes, thank you very much.
Thank you. And we'll be back with Joey Boston straight after this break. Basil Chapman, Dow's down 6, S&P's down $1.82. Hey, not bad action, this whack-a-mole.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. This is the Tiger Technicians Hour, and the Dow is really acting pretty well after so many days of being up and just sitting there, -5. S&P's down $1. The Qs are, in fact, right now, let me find them. QQQQQ. Up 20 cents at 67.36. Amazing. We're going to go to Joe in Boston. Hi, Joe. How are you?
Hi, Basil. I'm well. How are you?
I'm well, thank you.
Good. Good to talk to you.
Good to speak with you. It's been a little while.
I know. I hope you feel better. I know a lot of people have been getting sick. So
yeah, I'm going to be testing it out this afternoon by playing tennis for the first time in about 10 days, and
Good.
we'll see how I'm doing.
Good. Hey, I wanted to take a look at MA.
Yes. Do you have a position in MA?
No.
All right. And Joe, since you're from Boston, I'm going to mention this is a very good opportunity. I don't know if you've been to the Museum of Fine Arts lately. They have some fantastic exhibits going on. There's this photographic one by Testino, all different models. It's the size and the scope is just quite incredible. But they also have an exhibition of postcards. The reason why I want to bring it up is it's part of this whole. I like to look at the mega trends. To me, it's very important. So if you look at the postcard, the whole period of the 1910s to 1920s, there's this whole thing about the automobile, about travel, about ships, about people going for cruises for the first time. The automobile expanded the world for people. Well, the world in the sense that all of a sudden you could travel from one area quite safely if the car didn't break down. But the reason why I'm bringing it up is that the Museum of Science has a new. It was in the paper the other day, in this very austere period where people are talking recessionary stuff all the time. What happens? Museum of Science is going to build a $21 million wing it's called the Echo Wing. It's going to overlook the Charles River.
Wow.
And I must say that they've improved over the last couple of years. I always thought they were the dullest science museum I've ever been to. They really have improved a lot. But now they're going to build a $21 million wing. And the Kennedy Center just announced they're going to, unfortunately, instead of the $560 million project they've got, they're going to cut back a lot. You know how they always cut back so much in Washington? Well, they're cutting back to $100 million, a new part of the center of the Kennedy Center, and you bet your bottom dollar that when it's all done, it won't be $100 million. It will be very close to the original $560 million.
Wow.
Now we can go back and look at MasterCard, because I had asked my engineer, my wonderful engineer, L, because he said Joe Boston, M.A., and I thought, is that Boston, Massachusetts, or is it M.A. the stock? So we're looking at MasterCard, which is trading now at 515.72, down 276. Here's another thing that's hardly ever spoken about. Even in 2007, when the market went to its top at that particular point, there were very, very few stocks in the 300, 400, 500, 600, 700 range. Very few. I don't know if you've noticed, but in the last 3 to 5 or 6 months, I've never, even in the top that we went to in 1987 or 2000, any of the tops, I don't recall ever seeing popular stocks constantly being up, except for, of course, 2000, when we had those incredible the runs in the high techs. So this is a very interesting period, because we're looking at many stocks in diverse areas up in the 500s, like MA, which is MasterCard. Now, do you have a position?
No, but I thought it looks like it's somewhat topping out on the daily.
Well, this is interesting. I've got a G top in the daily at 532.47 on the 10th of January, and it's pulled back, but it has formed a little cluster formation here. At the same time, I've got the weekly chart with the MACD still quite strong, the stochastic at 88%, but both of them are turning down with the on-balance volume, but the price hasn't broken the 500, and it's being covered by, I believe it's 503. No, it's 505. 505 is the 9-period exponential moving average. It has not closed underneath there since the week of 26th of October, when it went to 447. Now, here's the thing. My monthly is in leg F.
That looks pretty steep.
And that's a very, but if you look at the chart, folks, I really recommend, if you're able to go to Tiger TV, this is Tiger 1, I get archived on Tiger 11. Have a look at this chart. I'm going to move it right into the middle. Usually it's the left side is the daily, the middle is the weekly, and on the right I've got the monthly. I still don't have anything technically wrong, and there is a chance that this could be recycling with an instant restart, and in fact this is F/B. Here's my reasoning. Yeah. The stochastics at 93%. The on-balance volume has a long way to go before it becomes overbought. And the MACD is making that M formation in the fast-moving average that is still very positive, and the stochastics way down at 462. So let's put it in perspective. So I'm going to ignore for now the monthly, saying I don't have a signal there. I do have a signal in the weekly, but the price is not conforming to the type of sell-off so far. So unless MasterCard gets deep into that very strong candle, the big takeoff back on December 31st, back when we started January, it went from 482.90 the week of the 4th right into 515.46. So here's what I'm looking at. I personally wouldn't have a position right now, either long or short in MasterCard, but I think it's a great benchmark to be looking at, because if it holds, and within 2 weeks, today is a Wednesday, within 1, Yes, within 2 weeks, if it has made a new high, even though that's going to be a brand new leg D, if I use my ChapmanWave recycle or renaming method, it'll say that monthly chart is still really strong.
Okay.
If, on the other hand, it starts to break down, it's at 515. If it takes out I would say 512 to 510, very important support. If it closes underneath that any day in the next 3 to 5 sessions, then all of a sudden the gap with the low of 501, round number low, the gap of the 2nd of January, the December 31st high was 491.92, and then it gaps up in 501, round number, so it's a 10-point gap. Some of that gap could get filled.
Okay,
so
that's fine. I'm just going to watch it for now. Can you pull up one more for me real quick?
Sure can.
AIG?
Oh, AIG. All right. AIG is the insurance company, folks, that... oh, boy. I mean, this is a stock that once was at 1,450... No, 1,538.92. A little bit like the S&P up in the 1,500s. And then it dropped a little. It just dropped a little. Kind of went down to 12 cents. Is that possible? No, minus 60. Oh, minus 68. I don't know what that means, but it certainly had a tremendous decline. But it's had a tremendous comeback at the same time, and it's broken above the left side high of the 18th of October of 37.67. Do you have a position in this?
I'm long. I've been long for a little while, but I think it looks like it could go much higher if it can get a little bit higher. I was thinking like 52.
I'm having a very difficult time with the weekly and monthly because my prices are squashed, and I will. You know what? In the break, I'll have a quick look to see if I can adjust that so that I can have a good look at the weekly.
Yeah, because it's so depressed. Yeah,
it's depressed, right?
Yeah,
and it was certainly depressed was the word that we should use. You know what's interesting? The fact that it is closed above 37.67, it did that yesterday by closing at 37.30. So that was 37.82 yesterday, yes. That to me is really important because the stochastics at 89% and strengthening.
Right.
And the MACD is good. I think you're in a fabulous position. And in fact, I looked at this. It's given so many opportunities to get in.
But it's so hard. I know, it's so hard. But this looks like it could go a lot higher.
I'm going to say to you, I don't often say this, but at this particular point, if you've got a buy and hold strategy so far with this, it's worked beautifully. What I wanted to say is that those sudden pullbacks to the 9-period moving average or just under, every time it does it so quickly. One move, it's like a stair-step move, pops to a higher high, and then it says, oh, I can't take it, I've got to come back.
Well, you know now the government's completely out of it.
And the government's out of it. They're on their own, but as a single entity now, I like the MACD and the stochastic and the, you know what, I'm going to do it right now. Hold on. Here we go. I'm going to format it. Let me format it. I'll make it 40. So scaling, it will change everything else. But in this case, I'm going to go to fixed. And instead of 205, I'm going to go to 45. Here we go. All right, there's the weekly. I should have done this ages ago, but then it messes all my others up. So this is peak AB, pulls back. Starts brand new A, B, C, D, E, F, goes to a G, pulls back. It goes A, B, C, D, E, F, pulls back. This is brand new A, B, C. So the weekly is in C. I agree. I think it's going higher. And it's this beautiful, quiet stair-step move. And it's making higher highs and higher lows. And it looks very much, I'm trying to think, I can visualize exactly in my mind that something I've seen that looks exactly like this. But, I know what it is. If you go to the Museum of Science, they've got this water, if they can recreate a wave. And it looks just like these waves where it pushes, and you know how a wave, it makes this, it goes to a peak and then it pulls back, and then it goes to a peak and then it pulls back. It's like a gong. If you've ever looked at the wave of a gong when it gets hit. There's nothing, and then all of a sudden the sound expands and then it contracts. So it's got a very familiar look to it. I like it. And talking about waves, have you seen the new video? McGregor, I think the guy's name is. So one of my subscribers yesterday emailed me this site. I went to it, and then I saw it on TV last night. A guy just surfed 100-foot wave.
Wow.
100. Well, it's been done a couple of times, but this is a recorded one. This is one of the first times that they're going to try to get an exact magnitude. They've been able to measure waves before because they've been measured from the mast, from the camera on the masts of some of these very tall oil rigs or the ocean-going vessels. But this one is off Portugal, and he surfed it, and he did a fantastic job, one of the scariest things he ever did. And he didn't realize that he was right on top of the rocks that he had promised his wife that he would not get near. But the wave kind of moved him there, and he said he'll never do that again, but in that area, but he'll find another one. So, talking about waves, I just thought if you had seen that, it is. Can you imagine 100-foot wave? Well, we don't know yet if it's 100 foot. He's waiting for the measurement, the official measurement. That is an incredible thing. I mean, I like to surf the waves in the ChapmanWave, but that is an incredible feat.
That's amazing. What's the guy's name?
I think his name is McGregor. I'm not sure, but you'll read a lot about it. You can just surf. You can go to Google and just say the highest wave surfed, and I'm sure this guy's name will pop up. And you can see the video. It is frightening. And there's a wonderful series of on waves, on surfing waves like this, that PBS often shows. Well, I say often, every year or every 2 years they show it. And it shows these guys hunting for these 100-footers, and you have to go out and you have to surf it via a ski-doo, whatever those things are, because you have to get to a certain speed before you can even get onto the wave itself. So isn't that incredible? So AIG, I love the look of AIG. I suspect if it pulls back 3682 to 3620 will be some kind of support. It will start to give it up completely if the stochastic in the weekly doesn't get to 80%, but instead starts to go only to 68%, and you see the price break into the 34s. Then I would say to you, whoa, be a little careful. Maybe not necessarily change your longer term, but at least take something off. But in the meantime, I think this is a very nice move. This has just been a steady higher highs, higher lows, higher highs, higher lows. And this is a little bit of one of the first big accelerations that it's had just recently. So that is in the quickest it's gone in the shortest period of time.
What's the bottom of that monthly candle, that big one on the left there, the long one?
The bottom, that goes all the way down to, I've got minus 60.68. So something's wrong with this. Stocks don't usually go to minus 1.68. I don't know. So something's had to be changed in the calculation, because
I think the low on that's like $20 and the high's like 400.
That would be, well, I've got the high of 15, so I don't know how that's worked, because I had this notated. Oh, no, the high is 2,066.72, made in December of 2009. So, and that might be with split side. They must have recalculated it because of I don't know. Something must have happened. But anyway, it made its high way, way, way back in December of 2000. So it's had quite a fall. But yeah, I think, I can't remember, Ben Moshe, I can't remember what the guy's name is. I think he's doing a very good job.
Cool.
So thank you so much for calling.
Thanks, Basil.
And that's Joe in Boston. We have a little chat about different things here in the Boston area. We'll go to Warren in Denver straight after this, and let's see what the Dow is doing. Down 3. S&P's down 0.91. This is definitely that Storkley formation, the psychology of buy every dip. We'll be back straight after these messages. Basil, what about the dollar element in the Den asks? Oh, look at that.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back, and now the Dow's unshackled, the S&P's unshackled. This is something. Let's go to Warren in Denver. Hi Warren, how are you?
I have a question about DD.
Yes, DuPont. So I went to D instead of DD. DD is right. DD is right there. DuPont, DD is the symbol. It is at 47.73, down 24 cents. And I've got peak E in the daily. Stochastic still at 89% back. D's turning down, sitting on the 200-period exponential moving average of the daily. Weeklies and leg B's acting very well. And the monthly is the one that I have to watch closely, because there is a pattern here that says that if it doesn't pull back under the 45 area in the next 3 to 4 weeks, but instead takes out it's a 47.71. If it takes out 49, it could in fact rally all the way back to the previous arch high in the 53 to 54 area. So let me ask you, do you have a position in DuPont?
No, Basil, I sold the position, and I just kind of wanted to get back in like everybody else who's looking for a short, which when you see that, everybody calling about the shorts, we know how that goes.
Well, out of all the times to think of shorting DuPont, this is probably it because it's just filled part of the gap. It had a huge gap down back on the 22nd of October. It was traveling and moving along nicely, and it went to 49.07, and then plop. The next day it was down in the 46 to 44 area. So now this has taken, it's been a struggle, but it's gotten back, and it's over the 200-period exponential moving average. I'm going to make a suggestion here. You see the dollar. And DuPont, I believe, really is impacted quite a bit by the dollar. The dollar is making the pattern that I call the dreaded H. It looks just like an H formation. Actually, this one looks more like a staple. It bounced up to 80.97 peak C, where it became peak C minus because it failed. Now it's in a new trough C. And that says to me there's a good chance it could still go to a trough D, and 79.26 was the previous low, and today's low is 79.24, so it's 2 cents under it. Regardless, if it closes way above, it could bounce, but that makes 79.70 the 9-period moving average support and resistance. So it looks to me like the dollar wants to test the 78.93 low of the 17th of October or the 78.60 low a little bit before that back in September. So that's, in a sense, that should be reflected in DuPont stock. So in a way it has been reflected. Most importantly, what I'm looking at is DuPont weekly chart is going back into that very ugly candle because of that big gap down. I like what it's doing right now. I would only say to you that if I was to be shorting DuPont, looking at it on the downside, no. If someone asked me, would you short DuPont, I'd say, you know what, I'd rather look to be a buyer if certain conditions are met. If it pulls back by next Tuesday or Wednesday, and it's in the 46.80 to 46.50 area, and it's showing support, if the general market is starting to look very weak, and bonds and the dollar and the VIX, the volatility index, are moving much higher, then I wouldn't look at this as a potential buy at all. But the weekly chart is saying to me right at this moment that there's a greater chance that if it's able to clear the high of last week of 48.40, that it'll continue higher, rather than saying there's more than about a point and a quarter to the downside, which is what I see as very strong support. Now, I can change my mind because I'm waiting for the weekly close on DuPont. So you've made money in DuPont. I'm going to say to you, don't be anxious to do anything right now. I think there's a greater chance that this is just a pullback in DuPont. It looks to me like it wants to go higher. Have patience. Let's look at it again. Today's Wednesday. Let's look at it again maybe Friday or Monday. Maybe Monday's the best time, okay?
I would have never thought of that dollar pairing. Thank you so much, Basil.
Thank you very much. That was Warren in Denver. Folks, stay tuned for Larry. I'm just going to run this as we're going out because I wanted to show the euro-dollar. Powerful leg D up in the daily, powerful leg D up in the weekly is testing the left side resistance. So far, so good. And the USD, same thing.